national debt crisis is getting worse faster, and no president or law can slow this train down. The US national debt just hit $35.7 trillion in October of 2024. Now, we're all extremely familiar and quite frankly just numb to massive numbers like that, so we have to put this in perspective, see how quickly this is starting to grow. In just August of 2024, the national debt was at $35.269 trillion, which, as you'll notice, is exactly $500 billion less than where it stands today, which means in under 7 weeks, the US national debt increased by $500 billion. Let me say that again. In 7 weeks, the national debt increased by $500 billion. But it doesn't stop there. If we go back to exactly 1 year ago as of the time of this recording to October 18th of 2023, we see the national debt was only at $33.629 trillion, which means in 1 year, the national debt increased by $2.14 trillion, over $2 trillion in just 1 year. And if you want to see something even crazier, the Treasury says that the deficit was only $1.8 trillion. Now, if you're unfamiliar, the US gets its income by taking taxes. It spends every single dollar it takes from taxes, and then it spends additional dollars that it borrows. The amount that it spends on top of the taxes that it takes is called the deficit. That's the amount that it borrows. Now, the official deficit for fiscal year 2024 was $1.8 trillion. But we can see that 1 year ago, the debt was at $33.6 trillion, yet today, the debt is at $35.7 trillion, which means the real deficit was over $2 trillion. So how in the world could it possibly be? So how in the world could this possibly happen? How could the national debt grow more than the official deficit? The answer comes from this chart right here, the current interest payments on the federal government's debt. Now, this chart is old. This only goes through the second quarter of 2024, but as of the second quarter of 2024, the interest payments on the national debt were about $1.1 trillion. But time has obviously passed since then, and interest payments on the national debt have grown. And we can figure out a good idea of what they are right now by looking at a couple of numbers. First, we need to take a look at the average interest rate on the national debt. As of August of 2024, that was 3.35%. If we pull up our trusty calculator, we can take the national debt of $35,769,084,471,524 and multiply it by 0.0335 to get our 3.35%. We can see that as of August of 2024, the interest payments on the national debt had reached almost $1.2 trillion. And that was back in August when the national debt was lower than it is today. So we can safely estimate that the interest payments owed on the national debt are at least somewhat above $1.2 trillion annually as of this moment. But the national debt figures are stated without including the interest owed, which means when you see the national debt sitting at $35.7 trillion, that is the number of dollars the government has borrowed, not the number of dollars the government owes back. Now, if you take a look at this chart again that I pulled up before, you can see that over the last 2 years or so, the interest owed on the national debt has skyrocketed. And yes, this is abnormal. Taking a look at a longer term chart of the total interest payments, you can see that that was the same time that the dollar interest payments on the debt started to explode. The reason this is happening is very simple. The United States government is borrowing almost exclusively at the short end of the curve rather than the long end of the curve. Over the past couple of years, interest rates on short-term debt have held above 5% and only recently have gotten down below 5%, while rates on longer-term debt like the 30-year treasuries were a lot closer to 4%. I'll explain why the government has been borrowing at the short end of the curve, even though that debt is more expensive in a moment. By the way, if you are worried about the upcoming election and some of the political chaos that it might cause, and you are looking for a way to protect and even grow your portfolio as this all plays out, then I want you to write this date down. Sunday, November 3rd at 7 p.m. Eastern Time. That's the day I'm going live on Zoom to detail something I call the election chaos trade. This is a special type of asymmetric trade that has historically soared in the months following an election. In fact, during the last election cycle, it produced some of the biggest gains yet. In this election cycle, I believe it could soar even more. That's why I'm going live on Sunday, November 3rd at 7 p.m. Eastern Time to tell you all about it. I'll detail things like how this trade would have made money regardless of the markets going up or down. How this trade had the potential to pull in massive performance in every election going back to 2004. The key to making a strategy like this work out in your portfolio. And finally, why November 4th might be your last chance to get in. If you're interested, simply click on the link in the description below and register for the event. Attendance is free, but spots are limited. Last time I did an event like this, we had nearly 4,000 people register. So we might not be able to fit everybody onto the call. That's why it's a good idea to register now, bookmark it on your calendar, and show up early. So to do that, just click on the link below and I look forward to seeing you there. But first, I'd like to point out exactly the distribution of maturity on the national debt as it stands right now. About 21% of the national debt is borrowed by using treasury bills. There are three forms of US treasuries. We've got treasury bills, we've got treasury notes, and we've got treasury bonds. They're all forms of debt where the government borrows money and owes more money back, but the difference is when they mature. A treasury bill, which is about 21% of the current national debt, is debt that will mature or needs to be paid back in 1 year or less. Treasury notes, which make up the bulk of the national debt at about 50%, mature in anywhere between 2 to 10 years. And anything that matures beyond 10 years is a treasury bond. And those currently make up about 16% of the national debt. The bills category, which is again, extreme short term, under 1 year for maturity, has exploded in recent years. And T-bills have had the highest interest rate of all forms of government borrowing over the last couple of years. And so not only is the government borrowing at the short end of the curve, which is the most expensive right now, but over the last couple of years, as they've been doing that, it keeps on maturing and they have to keep on borrowing again and again at the short end of the curve just to maintain that debt. But remember, it's not just short-term debt that matures right now. We can also have long-term debt that was borrowed a while ago that is maturing right now. So of all of the national debt, how much is maturing soon? Well, as of September of 2024, approximately 1/3 of the national debt will be maturing in the next 12 months. So a good chunk of that is the T-bills that have been borrowed. That makes up about 20% of the national debt. But there's another 13% on top of that that comes from notes and bonds that is also going to be maturing within the next 12 months. Already, interest on the national debt makes up the third largest spending category for the government. And as this debt spiral continues, and they have to pay more and more just to maintain the debt, which increases the debt faster and faster, means this category of interest on the debt will very quickly explode to the #1 spot on the budget. This is why I said earlier that it does not matter who gets elected. It doesn't matter who is the next president. It doesn't matter who gets into Congress. It doesn't matter what laws are passed or what kind of GDP growth we have. There's no slowing this train down. This is called a debt spiral. Exponential growth of debt maintained through money printing, fueling its own growth. Gone are the days of moderate deficits and maybe even sometimes surpluses. Very soon, even the record deficit of $3.3 trillion in 2020 will look like a breath of fresh air in comparison to the deficits we're gonna have in a few years, just like the deficit of $1.4 trillion looked like to us right now in retrospect, looking at the great financial crisis. Now, it should go without saying that left on its own, this would result in a complete deflationary death spiral, because even the entire money supply in the United States is only $21 trillion, which is not even 2/3 of what the government owes. They could quite literally confiscate every dollar from every checking account, savings account, and 401k, and it would still not be enough to get rid of the national debt, which means the only reason this has continued this far and why it will continue in the future is through money printing. The government borrows money that has been loaned into existence by the Fed and by banks, which means devalued dollars measured against goods and services and assets, which is why when we take a look at the absolute price level, not the rate of increase, just the actual prices, they do nothing but go up. It's also why the price of gold is setting all-time high records, why the price of silver is exploding, why the price of Bitcoin is playing with all-time highs, why the stock market is at all-time highs. And just in case you still have one last little shred of hope that the next administration will be able to do something about this, let's just pretend that the interest on the debt doesn't exist. The government currently spends $1.5 trillion on Social Security payouts, almost $1 trillion on healthcare expenses, almost $900 billion on Medicare expenses, not to mention a similar amount on national defense. If you think there's any shred of hope that the next president or Congress will do anything to slow down, let alone decrease, the spending on Social Security, Medicare, or the military-industrial complex, well then I've got a bridge to sell you, because it's not happening. And considering the Social Security Trust Fund is going to be depleted by 2033 at the earliest, just wait until that thing runs out and we see the spending, borrowing, and printing that happens as a result. But of course, don't despair, there's always a way to profit off of the chaos. And today that is more true than ever. So don't forget, hit that link in the description below, register for the event. Thanks so much for watching. Have a great day.